Hello, I'm John Kreitler. Welcome to This Week in the Markets. As we finish out the second quarter and the first half of 2024, let's look back and see where we've been. For a market that was looking for 6 rate cuts in 2024, we haven't had any yet from the Federal Reserve. Right now, the bond and stock markets are looking for 2 rate cuts, possibly starting in September. Again, the Federal Reserve will be data dependent, and while there's a July meeting, all eyes really will be on Chair Powell and his speech at Jackson Hole at the end of August. Typically, a Fed chair has used that speech in order to set or change course possibly in Federal Reserve rate strategy. There have been all-time highs in major stock indexes, the S&P 500, the NASDAQ, and the Dow Jones. However, the smaller companies, small cap and mid cap indexes, have trailed their larger counterparts. This is in part due to the higher for longer rates, where interest rates are more sensitive to the small cap and mid caps as they look to refinance their loans. Basically, to see if there's a regression to the mean and the small and mid caps catch up in the second half of the year, or if the trend will continue. Speaking of the bond market, the 10-year basically has stayed in a wide range for the last 12 months, between 3.75 and 5%, and right now at 4.3%, right in the middle of that range. In July, we'll see a CPI report, a jobs report, and a Federal Reserve meeting. All eyes really also will be on corporate earnings, forecast for 2025, to see if there's any changes with supply chain issues, and again, what is the consumer demand with interest rates staying higher than most people expected. I'm John Kreitler. Thank you for watching This Week in the Markets. Have a great week.